Hi there, I'm Tony Potts, host of the Real Estate Masters Virtual Summit. Have you always wanted to own and invest in real estate but didn't know where to start? Are you struggling to close your first deal? Or maybe you are a seasoned real estate agent trying to break the $100 million ceiling? Which stage of your real estate career are you in? Our experts will be the guide for you to master your journey and build off their success. 42 of the world's very best titans of real estate to guide you to prosperity. Now, whether you're a realtor, passive investor, multifamily syndicator, work with distressed properties, luxury property, commercial real estate, legal, financing, and more, if you're involved in real estate, we have exactly what you need to take your game to new heights.
Hi, everybody. We're back with episode number 2 of the Real Estate Masters Summit podcast. I'm Damian Cole, and today we have Cody Laughlin and Brian Alfaro, 2 of the partners of Blue Oak Capital over there in Houston, Texas. They are specializing in multi-unit, multi-family rentals, apartment buildings, and Cody has been doing real estate since 2010, and he started doing multifamily in 2019. So this is a really good podcast. You can learn a lot from this one. Okay, let's go. Here we are with the Real Estate Masters Summit podcast. We have Cody Laughlin and Brian Alfaro. We are talking about real estate. So Cody, the managing partner of Blue Oak Capital, he's a registered nurse, owns 240 units across Texas, Tennessee, and Kansas, 3 great states. Acquired his first tenant in 2010 accidentally. I guess he could tell you that story. And now he's doing primarily multifamily, and he'll tell you why he likes doing that. And we have Brian Alfaro, the managing partner at Blue Oak Capital. He's joining us. You guys are in Texas right now, huh? Nice. How's Texas going?
Hot. It's getting hot. Getting there.
Hot. Yeah, a lot of Californians moving to Texas right now.
Oh yeah, we know that all too well.
Yeah. Have you done any business with any Californians coming in?
I would say Cody could speak very intimately about our competitions on assets, probably bidding wars.
Yeah, that's our level of relationship right now with a lot of the East and West Coast money is butting up against them versus working with them. But we've got a lot of great relationships all across. So
nice.
Yeah.
Nice. So Cody, I have a bunch of things I want to ask you, man. I'm really interested in the mindset you got going on and the time you're saving doing the multifamily stuff instead of flipping, instead of having one unit for one family. And so tell me a little bit about that, if you could.
Yeah. So my backstory started, back when I started my W-2 career in 2008, and had a very traditional upbringing, right? Had 2 working class parents, believed in education. So, just followed the script that I was taught my entire life: go to school, make good grades, go to college, get a good job. So did just that, started my W-2 career 2008, moved here to Houston. My wife and I had just got married that same year. We bought our first starter home in a east side of Houston. And, I thought I was on the American dream, right? So my career path was going to be pursue a career ladder in healthcare. And in 2008, 2010, if everybody recalls, that's in the heart of the Great Recession, right? And the financial crisis and the housing crisis. And I was observing what was going on. I was like, man, this doesn't make sense. Like, I was watching people that were nearing retirement age that were having all of their retirement assets just decimated. And I was like, man, there's got to be a better way. So I started studying on how to invest in retirement accounts, how to invest in stocks. And 2010 comes and my wife decides that we want to move to a different part of Houston. And so we ended up relocating to a different part of Houston. We purchased a new home and unfortunately couldn't sell our first home. And we were in a bind because we couldn't afford to pay 2 mortgages. I mean, we're barely out of college, 2 years into our careers. And we ultimately had to stick a tenant in that home and, just to cover the mortgage. And we're like, look, we'll figure it out later. Let's just cover the mortgage and we'll figure it out. And around that time, again, I'm studying how to invest in stock market, studying how to invest in retirement accounts. And somebody says, hey, have you read Rich Dad, Poor Dad? Mm-hmm. And I was like, no, don't even know what that is. And so read it. And now I jokingly call it the Purple Bible because it's probably impacted most of our lives in the real estate space, right? But read that book and like a light bulb went off. I was like, oh my God, there it is, like complete paradigm shift in everything that I was aiming for. So switched the focus from trying to go up the corporate healthcare ladder to becoming a real estate entrepreneur. And that's what really led me down this path. And so over the past decade, I've been pursuing real estate entrepreneurship, real estate investing. I have taken some detours along the way. I did pursue some other business ventures that were non-real estate related that I did get distracted with. And through those experiences, learned a lot of expensive lessons along the way. But ultimately what happened is it helped me to be more focused now in our thesis and our investment strategy when it comes to multifamily. So, but I did start with single family flips. I tried doing a little bit of wholesaling for a brief period of time. And what I realized very quickly, it was becoming another job. It wasn't truly investing, right? It was just a lot of time and effort, and the return on that time and effort was just so small. And I was like, man, this is a really hard model to scale. And for me, the whole point of going down this path was to kind of gain not only that financial independence, but really gain my time back. I'm a father, I'm a husband, I have 3 children, 2 are a little bit younger. I want to be able to allocate that time to them on my own terms, right? And so I didn't see that being a fit in the single family space. And so that was the transition to multifamily, made that change in 2019. And, really started from nothing, didn't have any network experience, no liquidity. So really had to build the infrastructure of our business from scratch. But along the way, met our first partner, John, met Brian midway last year. And, we've just been really just growing ever since and just making a lot of big things happen. So long-winded answer to your question. I apologize, but that's my story.
It's awesome, man. Yeah. Time is more valuable than money. I mean, nowadays, like trading your hours for money, it's rarely worth it,
Mm-hmm.
Yeah, I agree. So scaling, man, that's what it's all about, right?
Yeah, absolutely. Again, I think if those of you who've spent any time in the single family space, Brian knows he spent some time there too. It's again, when you're dealing with one tenant, one house, one roof, one loan, and you're trying to duplicate that becomes such a harder model to scale versus if you have 10, 20, 100 units under one roof or a couple of roofs under one loan, that it just allows you to more efficiently grow your business when you can consolidate as many units under one asset as a whole. And so I know it's hard for certain people to kind of wrap their head around that. They think, oh, if it's just one single family home, that's easier to deal with versus a 100-unit apartment complex. But it's actually quite the opposite. And again, that was learned through some hard lessons along the way. So
mm-hmm. Yeah. But the easy way, you don't get, you're not getting the benefit. Like you take the easy way on something, it's not, everybody could do it, so why do that?
There is no easy way. Let me just throw that out there. there is no easy way. Yeah. Listen, I think it's a tough business. It's a tough industry. Entrepreneurship in general is difficult, right? No matter what avenue you're pursuing. Yeah. It is difficult, but I think if you're willing to be patient, if you're willing to put in the work, if you're willing to make mistakes and learn from those mistakes, that's where you find success. So, and as you mentioned, I mean, if it were easy, everybody would be doing it, right?
Mm-hmm.
So,
Yeah. And another thing you're doing, you have like a property management team, right? That just, so that's even more hands off for you, right? That's, I mean, if you're gonna do it, go all the way, right?
Well, we don't. No, we're not at economies of scale to where we have our property management team. I think our long-term vision would maybe to become vertically integrated. Brian is definitely, our partner that's more intrigued by the asset management, I would say. And I think that's a long-term vision, but not quite there yet.
Okay.
But it makes sense. I mean, it does make sense when you can pull that in-house and have that control as you scale.
Okay. Yeah. So what's the smallest unit building you're working with right now?
So we're currently co-sponsoring a 240 unit deal here in Houston, Texas. We're one of the co-sponsors in that deal. And then I'm a passive investor in 128 units as well. So that's the extent of our portfolio.
Okay. And if people, your Blue Oak Capital, if people want to invest with you, how do they get involved with you?
Man, I love it right out the gate. This is great. Well, you can check us out at www.blueoakinvest.com/Y real estate. Make sure to download our free real estate investing guide, and then make sure to get connected with Brian and myself at Cody and Brian at blueoakinvest.com.
Yep. And then what does that entail? They become a part property owner, or how does that work? Actually, say if I had 50,000, I wanted to invest with you guys. I like the way you guys do business. I want to invest. What would that entail?
Yeah, so our business model is derived from creating joint venture or syndication structures. We're looking at assets that are typically ranging from about 75 to 200 units. So we're pooling resources together, right, to take down these bigger deals. And so, Brian, John, our third partner, and a few other of our partners we have good relationships with, we're out there actively finding the deals, sourcing the deals, putting the deals together, building the team and securing the debt. And we're also building relationships with passive investors who are looking to invest their money in real estate, but maybe don't have the time to be hands-on or really don't want to. That's just not for everybody, right? So if anybody wants to participate in that, we look to build a relationship first and understand who you are as an investor, what your investor goals are. And then, we love to tell our story and our investing thesis and what we do and the type of assets that we like to buy. And if it's a good fit for you, then we find a way that we can find hopefully a future opportunity together.
Nice. And you got into real estate, was it because of the kids, because of the family? You wanted, like, a lot of people talk about the why of doing something. Like, you got to have a why. Like, why would you choose real estate? Like, is it because of the time, or because of the money, or?
Yeah, when I first got into it, it's a difference from where I first started versus now. So when I first got into real estate, I saw the path to wealth being going to work for the W-2, again, climbing the corporate ladder, getting a high seated position, maybe going back and getting a graduate degree, but just continue to advance in the career ladder, right? And I looked at my parents who were two very working class parents, definitely blue collar, but we still had a great upbringing. I mean, they provided everything for us as I'm the oldest of four boys. But I saw what they didn't have and what we couldn't do growing up. And I was like, I don't want that for my kids and my family, right? So for me, I saw this as like, look, how do I continue to build my wealth? How do I continue to expand my means, as Robert Kiyosaki likes to say, right? And so when I discovered Rich Dad, Poor Dad, and I discovered the power of real estate investing, for me, it was a way of expanding my wealth, right? Expanding my means. But then along the way, I did have my children and understanding how valuable that time is spending with them and those little moments that you miss from having to go to work or you having to be committed to somebody else's schedule, right? As an employee. And
I decided to do real estate because I had a good why, just like Cody now. I didn't necessarily have the same why. I don't have any kids yet. My wife and I are hoping for some little ones soon, but the why for me was more of creating that generational wealth, and then also really working on projects that had a high, what I like to call as ROE, just return on effort. Just single family is a whole lot of effort. And to me, the returns, at least at the time when I was entering the space in 2018, were starting to shrink, to spend a lot of time and effort, finding a deal, negotiating it, getting the debt, closing on it, hiring a contractor, renovating it, and then leasing it. Because I was particularly looking for rentals. For all that to be said and done, maybe you're getting 150 or 200 bucks a month in profit. Just didn't seem like a scalable model. So I wanted to work on something that had a higher ROE, return on effort. And so it led me into multifamily. But for me, it was always about, with real estate in general, whether it was single family, multifamily, triple net, whatever, it was always about just, I would say, raising the bar just for my family's name and my family's legacy. Just like Cody, my parents are blue collar workers. My mom was a stay-at-home mom. My dad's a small business owner, and they're lifelong renters. They've never owned a home. So it was always one of my dreams to not only be able to buy them a home one day, but just to show people, if you put your time and your effort and your heart and your mind into something, what you can really do. In real estate, we have a lot of limiting beliefs about, I don't have enough money. I don't have enough experience. I don't know the right people. How am I going to buy that 5, 10, 15, $20 million deal? I can't do that. But just trying to show people, like, look, all the things I just said, if you really focus on something, there's no real limit to what you can do. So that's why I got into real estate, and it still continues to be my why, along with my wife and our future family, of course. But yeah, I followed that same path. I started in the single family space like Cody. It wasn't accidental. It was more intentional, but very quickly realized that it wasn't something that aligned with my personal personality. I'm a very business oriented person. I like scaling. I like growing. I like systems. And it just seemed like a challenge to get to that point in the single family space at the time. So pivoted over to multifamily, met our third partner, John, met Cody in 2020, and then joined the Blue Oak family. And here we are looking at, deals in Houston, San Antonio, and some other markets.
Nice. Yeah. Family, man. It's time. You gotta open up your time, man, So you read Rich Dad, Poor Dad, of course, too, Brian, right?
Oh yeah. I think we all have.
How many times?
Yeah, a couple at least.
Yeah. Any other books you recommend for people trying to improve their mindset or jumping into the real estate game or sales or?
Yeah, there's way too many books. You could probably spend all day reading and you still would have books to read at the end of the day. But I would say some books that kind of got my mindset or just business philosophy started in the real estate space in particular. Obviously, Rich Dad, Poor Dad's a big one. If you're looking to get into larger deals, syndication, everybody knows Joe Fairless's book, the best ever syndication book is, I believe, what the name of it is. If you're looking for other books around mindset, there's some great books by like Ryan Holiday, The Obstacle's the Way, Ego is the Enemy, are two of his books that I'm really keen on. They're just, getting that mindset right. They're not real estate focused, but understanding that real estate's really hard. You're going to hit tons of walls, tons of obstacles, and you just got to keep pushing through it. And then not to have any ego, like don't get too big headed, don't get too cocky, don't get too high and mighty, because we all know real estate has cycles. And if you're not positioning yourself properly during these cycles and not buying good deals, you can, 2008 was just proof that somebody could snap their finger and you can lose everything, right? Yeah. So I would say those are some books that I would recommend for anybody interested in kind of getting their mindset and starting in the real estate space.
Yeah. Real estate. Yeah, people snap your fingers. Like, so Texas is, how hard is COVID hitting you right now because I know California, like a lot is still shut down. I'm not really too familiar with what's going on in Texas. I've heard a couple Joe Rogan podcasts say it's a little more open, but other than that, how's it going over there?
I would say, Cody, correct me if I'm wrong. It's pretty much business as usual. I would say here in Texas, obviously we struggled for quite a bit, just like most states did, but Texas is its own country. I like to joke. I wouldn't say we do our own thing, but definitely, it's definitely a Texan mentality, and we're very strong. And I know here in Houston in particular, we've just faced a lot of challenges over the last, let's just say 5 years, between hurricanes and tropical storms. And we had the freeze this past year, and we're very, very resilient. So, we're very quick to bounce back on our feet. And we're also we have that Southern hospitality, that, that Texas mindset. So it's always about helping your neighbor and just picking each other up. So here, things are pretty normal. Most people are still wearing their masks based on recommendations. Most businesses still ask that you wear a mask. But we've been, I think personally, like the whole process with vaccinations and just healthcare has been improving since the beginning of the year. So businesses are open. There's lots of deals on the market. Transactions are happening. People are still moving into places. Rents are still getting pushed. Rents are still increasing. So it looks like we're heading in a good direction.
Yeah, rents increasing. All those Californians coming in,
huh? That's right.
They're popping up more and more frequently. Yes.
Yeah, LA and San Francisco is like sky high. Yeah, owning, like, from growing up in San Francisco, owning a house there is like impossible. You got to move like an hour away, and still like rent for a one bedroom converted garage basement, like it's like $2,000 a month, like, and that's out of the city. Like, yeah.
Wow.
Well, not only from the price or the cost basis, but also from the tenant laws, right? It's a very tenant friendly state. And as a business owner, that becomes very challenging when you can't, evict the tenants that are taking advantage of your dwelling, right? When they're not paying rent, and they know they're not paying rent when they probably could, and you can't get those guys out. It's affecting you and your operations, and ultimately affecting the community as a whole, because if you as the business owner can't cover your mortgage, you're not going to be allocating the right resources into improving the property or the community. You're going to be more worried about, how do I keep the lights on? And that's a lot of headache, I think, for a business owner. And that's why I think we're seeing a lot of migratory patterns into the Midwest states like Texas that are very business friendly, that are very much more in favor of the business owner. And then plus two, some of our corporate taxes and such are different. Again, leaning very heavily on the business owner side and whatnot. And for us in Houston, for a large metro area, the affordability here compared to some of your other metro areas is quite reasonable. So although I feel like it's kind of maybe creeping up a little bit as far as how expensive things are getting, but overall, you can reallocate or relocate from, California, New York, come to Texas and really live much more. You could live, I guess, more extensively on the same means that you came from. So.
Yeah. And everyone's going to working online, and everyone's, figuring out how to not drive to work, and so that, the taxes, everything. I could see why everyone wants to move to Texas. It seems like that's the way to go, and you're attracting people over there. So do you have apartments? Do you have apartments outside Houston, or is it all in Houston?
Yeah. So again, right now our 240 unit deal is here in Houston, and that's our first active acquisition on the general partnership side. We don't have any assets outside of this market. We are looking, as you mentioned earlier in the bio, we're looking at East Tennessee, Kansas City as well. We're looking at some secondary markets around some of the primary markets here in Central Texas. So for us, we're willing to travel and go where the opportunities make sense, especially when it comes to bringing the right opportunities to our investor database. It's just, it's really, I feel like it's hard to find good deals in any market you go to right now. It's just the level of competition so steep. And I think most people like us are probably getting kind of irritated with competing against 30 other bids in these primary markets. So we're seeing a lot of competition now moving into the secondary and tertiary markets. And we're seeing a lot of competition in those areas. So, But from a passive perspective, again, I mentioned to you, I'm a passive investor in 120 units, and I'm passively invested in Phoenix, Arizona. Love Phoenix. It's a great market. I'm not going to go build an active footprint there, but from a passive perspective, it allows me to expand my portfolio and be in a market that otherwise I would not be looking at. And our partner, John, he's passive investor in 2,000 plus doors across 9 different deals across multiple different states. And, so it just really allows him to diversify your portfolio. So I encourage people when it comes to trying to find acquisitions, if you're only comfortable staying in your backyard, that's great. But if you're willing to kind of travel outside of that, I mean, you got to go where the deals make sense, especially in this very, very competitive market cycle.
Yeah. Arizona, nice place, man. I love the desert. Yeah, I went out to, let's see, Tempe area is really nice. Phoenix. Yeah, that would be a good place.
Yeah.
The rents there are a lot lower, huh? I think when I went there, they're offering first month free rent to just get tenants in there when I went out, but that was probably like 10 years ago at least.
Yeah, I would definitely say the landscape in that area has definitely changed. I mean, Phoenix as a whole has just really experienced this robust growth over the past several years, and it's continued to forecast to continue that growth, right? And so, we've been seeing 6% rent growth year over year. COVID things slowed down, everybody took a pause, but then it picked right back up. And I mean, you're just seeing this just massive migratory pattern, job growth. They've got a great diversified economy there. And what's happening is the local secondary markets around those areas, places like Tucson, Arizona, are experiencing some of that overflow into those secondary markets because Phoenix is just growing so much. So, there's a lot of great opportunity there, but it's hard to buy. I mean, you're buying at a 3 cap in Phoenix. So, but yeah.
Yeah, but it's a beautiful place, man. It's like not crowded. Walk around downtown and you're not bumping into people, and that's for sure. I really liked it there. Something about the desert. It's got that like romantic sunset and quietness. It's great. Yeah. So let's see. Do you guys have anything you want to talk about the about how do you guys see the future going for the next couple of years of real estate? Everyone's talking about there's a bubble right now. What do you think?
Brian, you got to whip out your crystal ball. Ready?
I wish I had one. I lost it.
Yeah, man. Yeah, I think that's the big elephant in the room that always comes up, right? Is what's the future going to hold? And I mean, I think the reality is nobody knows. I mean, you can talk to 10 different experts and you're going to get 10 different opinions, right? And I would definitely, say Brian and we consider ourselves pretty smart guys, but we're definitely not experts in any means. I think that we can continue to ride out our current circumstance for a lot longer than what people probably think. With our monetary policy, quantitative easing, I think that could sustain for a lot longer than a lot of people do anticipate. And so with that, I do think that we're going to remain in a low interest rate environment for the next few years. I do think that we're still going to see a lot of liquidity in the market. So we're going to see an increase in the competition. So cap rates are going to remain low. So I think we're probably going to ride this cycle out for the next several years. Now, long term, what happens? I don't know. Again, I'm not, I'm not the one to have any really educated input on that. But I do think that the level of competition we're seeing now and the current environment, I think we're going to sustain this for some time. So I still think it's a great time to buy. But it's also going to be very, very competitive as well. So
nice. Yeah. Well, that's a good outlook, man. We need positivity. All right. So let's wrap it up. But I like to play a little word association game. I'll say a word. You could say one word. You could go off on a tangent, whatever you want. You can say a sentence, but just a quick word association game. I'll just throw it at you guys. Let's start with Brian. Okay. Brian, the word is Texas.
Big.
Nice.
That's a good one, right?
Nice. That's very good. All right. Let's see. What else? Cody, comfort zones.
Break them, get
Break
out of
'em.
them. That's where success happens, when you get out of your comfort zone. If you're in your comfort zone, you're not doing it right. You got to get uncomfortable every day.
Yep, I agree. That's what I've been doing lately. Let's see. Brian, mindset.
That's a great one. I would say I'll use the phrase sharpen the saw, just be constantly working on improving your mindset every day. Even if you make 1% improvement every day, there's 365 days in a year. That's a 365% improvement year over year. It's a slow process, but just be sharpening that saw, work on your mindset.
Nice. I like that. Okay. Cody, single family rentals.
Avoid it. Skip through single family, go straight to multifamily. Listen, I think in real estate in general, it doesn't matter where you start. The most important part is just getting started. If you want to start in single family, great. Just keep leveling up as you grow. But if you really want to look to scale a big business and you really want to build a team around you, you don't have to start with single family. You can go straight to multifamily, and you'll be welcomed with open arms from this community that we have. So.
Nice. Cool. Then Brian will do multifamily.
That's a good term. There's so many words. I'm going to use the word focus. If you're in multifamily, focus on that one asset class and just put your head down and go to work. Just like anything else, it takes time. You're not going to wake up rich. It's not an overnight success story. Getting your business off the ground could take you 12, 24, 36 months. But if you focus, you're going to find that, there's a lot of fruit to be gained in multifamily, a lot of wins to be had.
Nice. Big tree, a lot of fruit, right? Mm-hmm. All right, Cody, one more. Rat race.
Rat race. Oh, everybody's following the rat race script, right? I mean, I think that, if you enjoy what you're doing and you enjoy your W-2 position, that's fine. But I think if you're looking to really take control of life and live life on your own terms, you got to get out of the rat race. And so you got to become your own boss. Yeah. Thank you. Sorry, I lost my words there, but yeah, I mean, you got to take control of your time, and you can't let anybody else tell you what your time and effort's worth. So go out, build your business, no matter what it is. If it's real estate, if it's retail, don't matter. Just again, step out of those comfort zones, put yourself out there, go build your own brand and your own business, and, break the chain.
Yeah, man. Break those chains. Mm-hmm. All right, guys. Let's you guys want to plug your company one more time, or anything you want to say before we wrap it up?
Yeah, I really appreciate the conversation, Damien. This has been fun. Really like the word association too thing. That's really cool. But yeah, man, listen, Brian, Brian and myself, excuse me, we're two parts of this trio here at Blue Oak Capital. So if you want to connect with us, learn more about what we're doing, again, make sure to check us out, www.blueoakinvest.com/Y real estate. If you want to learn more about multifamily investing and how you could potentially partner with us, or just learn about the industry in general, check out our podcast, the Prosperity Through Multifamily Real Estate Investing podcast. We're streaming on Google Podcasts, Apple Podcasts, Stitcher, and Spotify. And we also host a live and virtual meetup. So you can check out our Facebook page, the South Texas Multifamily and More meetup community. where we do a lot of educational content posting throughout the group. We also announce our live and virtual meetups as well. So look forward to catching up with you and networking you through those venues as well. So
We're not hard to find.
Not hard to find. Awesome.
Yeah, that's a good another point. Yeah, Brian and I are very, very active on social media as well, LinkedIn in particular. So you can find us on LinkedIn, and we'd be happy to engage and connect with you.
Nice. Cool. All right, guys. Hey, nice talking to you. Good luck. Keep it going, and we'll hopefully we'll talk again soon, one way or another. Enjoyed it.
Thanks, David.
All right,
Looking
guys.
forward to it.
Appreciate you having us.
No problem. See you later. On the next episode of the Real Estate Masters Summit podcast.
Ever.
Yeah.
I think sometimes people get so caught up in each sale. For me, I'm organically looking to create a community of people that I want to thrive in, actually engage with, help. And then it's not so much about sales. A lot of people who are on my page are all over the world. And for them, it could be, hey, Nicole, do you know somebody that's in Tennessee or that's in, Denver, Colorado, that could help me similar to what you're doing? And as the Instagram has been in play, it's just evolving into something different. But I think by doing that, I'm creating those conversations with people and authentically showing up and wanting to help, not just, is this a sale, and just throwing it away. I think that's where most people kind of lose folks online, because they lose that social media, that social part of being in social media. For me, I'm not going to do that. I don't care if you have 20 followers or 200,000. If it's real, then I'm going to connect with you, and that's just it.